The threat is real. In 2020, the total criminal use of cryptocurrencies is estimated to be $10 billion US. The largest flows came from scams, $2.6 billion, followed by drug trafficking at $1.7 billion. This is likely to be a conservative estimate. One dark web market alone generates over $1 billion of drug sales annually. And whilst this isn't comparable to the size and scale of the South American drugs trade, it does nonetheless show that the threat is clear and present. And it's growing. As we all know, drugs are sold online, and the users don't pay with credit cards. They pay with cryptocurrencies. This is one example of a darknet market. It sells, or at least claims to sell, firearms. The darknet is a network hidden inside the regular internet that we're all used to. It is very hard to trace users and to locate servers operating on the darknet. So how do we use the darknet? There are 3 simple steps. First, download and open the Tor browser, the Onion router, and then go to the darknet site of your choice. Second, select the goods and pay, not with your credit card, but with cryptocurrencies. And third, have the goods delivered in the mail, hopefully. Cryptocurrencies are also used to finance terror. There are already several methods which have evolved in recent years. The first one was simple. Advertise on Facebook or Telegram with only one static Bitcoin address for all the donations. It was easy to investigate. The next generation uses the same darknet or encrypted messenger apps. They ask for Bitcoin once again, but now each new donor gets a unique Bitcoin address for the transfer. We can investigate this too, but it takes much more time and resources. Cryptocurrencies have value, so public officials can declare their assets in crypto. Anti-corruption agencies can check these declarations for accuracy. But how? Well, with tracing techniques, it is possible. Let's have a look at a fantastic cryptocurrency money laundering scheme. A corrupt official buys Bitcoin using cash and then declares that these coins have been bought many years ago when they were much, much cheaper. Now they're worth millions of dollars. Perhaps it's the perfect crime. Almost. It is possible to find discrepancies if you know where to look, and that's why the wallet history is so important. And there are many more serious crimes that are enabled by cryptocurrencies, from cybercrimes to fraud and tax evasion. They can all use cryptocurrencies as an enabler. So cryptocurrencies are a fantastic tool for criminals. They're fast, they're anonymous, and they're real. But what can governments do to make a real difference? The response has 4 components. We need policymakers, law enforcers, and supervisors who understand how virtual assets operate. We need investigators who can trace, seize, and confiscate the coins. And we need central banks and financial supervisors who are able to regulate and supervise cryptocurrency marketplaces. Tracing is the core part of a cryptocurrency investigation. It's all about tracing coins to the gatekeeper. The gatekeeper is a cryptocurrency dealer, an exchanger, a mixer, or another virtual asset service provider. They identify a customer, they can provide us with information that links the virtual to the real worlds. And to do this, you need 2 things. 1, specialized software, and 2, Critically, officers who are trained, competent and able to use it. Seizure of cryptocurrencies is different from freezing a regular bank account. Law enforcers need to find the key for the cryptocurrency wallet and then transfer the coins to their holding account, and they need to do it quickly. It takes a lot of preparation and training if you want to do it well, but it is possible. Regulation is crucial. There are international standards set by the Financial Action Task Force, FATF, like anti-money laundering measures for banks. But we can't just copy standard AML CFT banking practices, because cryptocurrencies, as we know, are harder, more difficult to track and trace. Cryptocurrency service providers must be registered or obtain a license. Banks, central banks, investigators need to be able to know who the customer of the cryptocurrency regulator was. If you're selling or exchanging cryptocurrencies, you must also follow Know Your Customer KYC guidelines. We must monitor transactions, detect suspicious behaviour, and inform anti-money laundering agencies. Records must be kept about clients, their identities, and their transactions, just the same way as we do with banks. And we must be able to get access to this information where it is proportionate, lawful, accountable, and necessary. But is that all? Of course, there's much more that we need to do. Cryptocurrencies are a relatively new concept to many people in government and beyond government. So the businesses must be regulated to protect their clients, their investors, and to create fair legal rules. Cryptocurrencies in themselves aren't bad. We are technologically neutral, but we do recognize that they can be used to commit crime and to finance terrorism. And this sort of business requires a special system of supervision and monitoring. Because cryptocurrencies are a virtual object, it's really easy to set up new services online without registration and without proper control. Good operators spend a lot of money for specialized software, compliance officers asking clients for documents and details. And well, the bad ones, the criminal ones, they don't ask questions and they operate much, much cheaper. This competition is unfair, and you have to scan the market daily to detect the unlicensed operators. And then those who are unlicensed, who aren't following the FATF recommendations, need to be sanctioned. They need to understand that investment in compliance is a good decision, and that underground business and criminal business is a poor idea. They will be detected, they will get brought.